Good afternoon, ladies and gentlemen. I'm keen to speak about the stock market's view on academic publishing, especially at the time when RELX, Wolters Kluwer, John Wiley share price are all close to all-time highs. So after a brief introduction on my job, I would like to discuss why investors continue to view academic publishing as an attractive investment, and also why a growing number of investors are again considering the higher education courseware publishing market as an attractive turnaround opportunity. I work as an equity analyst for BNP Paribas, and I've spent over 20 years looking at publicly listed companies such as RELX, Wolters, Wiley, Pearson. My job is to advise institutional investors such as mutual funds, hedge funds, banks, insurance companies, when to buy and when to sell the shares of these publicly listed companies. So to me, the answer to the question as to whether publishing is still worth investing in actually changes every day, every week, all depending on where publishers' share price stand and whether they do indeed capture the future that I foresee for these different companies. Having said that, and looking beyond the immediacy of share price movements, there are several financial characteristics that investors like about academic publishing, but also several risk factors that could make these investments less attractive. First and foremost, investors are attracted by the structural growth characteristics of these companies. The global share of GDP allocated to R&D is on a growing trend, with developing countries increasing their spend. As part of the United Nations Sustainable Development Goals, countries have pledged to increase both R&D budgets and the number of researchers into the 30s. There is structural growth with higher R&D budgets driving a higher number of researchers, which in turn publish a growing number of research articles. Over the last 10 years, Elsevier reported an average 7% per annum growth in the number of research articles they publish, with the total nearly doubling to close to 600,000 last year. Elsevier and other publishers have been able to monetize the growth in volumes, either through subscription price increases, as well as the launch of open access journals. Last year, Elsevier published over 500 pure open access journals. That is 10 times more than they were publishing only in 2013. Investors like the structural growth characteristics of academic journal publishers. Secondly, investors also like the defensive nature of the revenue model of academic journal publishers. I estimate that these journal publishers have not seen a year of revenue decline since the end of World War II. And certainly not through COVID, not the great financial crisis, or any other economic downturn in recent memory. Even the growth of new library tools such as Unsub or services like ResearchGate have not had any visible financial impact on the big publishers. In a world of low interest rates, investors have shown strong appetite for the defensiveness, yet structurally growing revenues and cash flows of academic publishers. Over the last 8 years or so, the average price to earnings ratios of the likes of RELX and Wolters has expanded by close to 50%. Thirdly, I believe investors also like the strong barriers to entry that academic journal publishers enjoy. In my opinion, as long as funders continue to base their research assessment exercise on journals, the publish or perish mantra will continue to protect the economic model of the publishing industry. It provides strong barriers to entry and what investors consider as attractive profit margins. Lastly, investors also like the attractive capital allocation policies of these companies. Publishers generate strong cash flows. They have proven to be very disciplined with their acquisition policies. They reinvest into organic growth opportunities in data analytics and other expert tools to drive an acceleration in top-line growth. They're also returning a fair amount of their cash to shareholders through dividend and share buybacks. Having said that, there have been times when investing in academic publishers would have proved a bad investment decision. For starters, open access. It has been a topic of discussion and occasionally of concerns for investors. In February 2019, for instance, when the University of California canceled its subscription to Elsevier, RELX share price fell by 6%, or close to $2 billion of market value was lost in a single day. Although UC only accounts for less than 0.1% of group revenues. In 2003, in 2008, in 2012, RELX shares did suffer from growing concerns on open access. With the rise of transformative agreements, especially in 2018 and 2019, RELX shares came under renewed pressure. But right now, open access concerns have largely been assuaged, as Elsevier was able to win back most of the consortium deals that they had lost initially. Elsevier has been able to sign several successful transformative agreements and has actually seen its top-line growth accelerate this year. At our end, we continue to forecast that Elsevier will see solid revenue growth, and should the market demand it, I believe that Elsevier will be able to transition to open access with higher volumes, more than offsetting lower price points. Over the longer term, another potentially bigger investment risk that I see has to do with strategic and regulatory changes in China. We question whether the changes announced last year in the Chinese research appraisal policy will put pressure on the flow of content to the Western world publishers. For now, this has not happened, but with China accounting for 20% of all the content, this is something I'm particularly attentive to. So to wrap up, academic publishers, although there have been phases of increased concerns, especially with open access, institutional investors remain attracted by academic publishers. It's been quite a different story for college textbook publishers with 10 years of consecutive revenue decline. However, more and more investors are also warming up to the idea that this particular segment of the market could be about to turn around and to see steady growth come back with new digital products, witness Pearson+, new distribution models, witness inclusive access deals, helping the publishers to claim back volume share from the secondary market and the piracy market. So in conclusion, is publishing worth investing in? At the right price, institutional investors do indeed think that it is worth investing. For now, the transition to open access is no longer a concern. Academic journal publishers offer attractive, defensive, sustainable, structural growth characteristics that investors like, hence share price on close to all-time highs. With that in mind, I'd be happy to take any questions. Thank you.
Thanks, Sami.
Well, that sounds like pretty good news. Go ahead, Sven, sorry.
Yeah, and here we have a question which gives us an opportunity to extend your speaking time a little bit. Mark Seeley is asking or saying, the publishing companies you mentioned do not only publish in the academic space. How does business information and legal publishing factor into your analysis of these companies?
If I look at RELX, I estimate that RELX generates around a third of its free cash flows from academic journal publishing. And on top of that, perhaps another 10 to 15 percentage point from databases, reference tool, expert solutions within scientific, technical, and medical information. And obviously the share price development at RELX is not just driven by the journals or by Elsevier, although it is a fairly big piece of RELX. Other assets within the group will have an impact. For instance, RELX share price did suffer through COVID because of its 15% EBIT exposure to the exhibitions industry, but I think this will come back. Investors also like the risk and business analytics division, where RELX is a big data solution provider. But Elsevier and science publishing is too big a piece of Elsevier for it not to have an impact. And we have seen the shares move on open access news flow many times in the past.
You mentioned some regulatory changes in China. Can you expand on what those changes are and why they're of interest or concern?
Well, I think we heard last year talks that the Chinese government were changing the way they wanted to appraise Chinese researchers, in particular by moving away from the impact factor, in particular by requesting that at least 1/3 of all articles be published in local language Chinese journals. And consequently, with China being 20-25% of big publishers' content sets, if we were to see a lower flow of content coming from the Chinese market, I think one of the strategic imperative of the industry, which is to offset price deflation in an open access environment by higher volumes of articles published, witness the strategy of Elsevier, I think this could suffer to a certain extent. So maintaining a large enough content set, I think partly depends on whether the Chinese will continue at scale to send their content to the likes of Elsevier, or whether these changes that the government is pushing through will stem the flow of content, thereby making the whole game of more volume, higher prices, and so on more difficult to play for the industry. For now, my views is that that change has not yet had any impact on the flow of content coming from China to the Western world leading publishers.
Sami, I would say from what I've seen over the last 10 years or so there is a much better coordination between libraries happening now, especially consortia, than it has been the case like 10 years or 7 years ago, whatever. Would you say that if the research funders would better coordinate on research evaluation and the structures there, that could bring about change? Because obviously there is discussions in every country that I'm aware of, be it China, be it Germany, in the UK and other markets, but it doesn't really have that momentum yet to bring about change. So what do you think? Can you imagine that these kinds of things could happen and really have then an influence on how publishing is being seen?
1 year ago, one of the founders of the San Francisco DORA declaration suggested to me that the momentum was actually not that strong and decelerating rather than accelerating. We have seen the initiatives from Germany with transformative agreements, but it feels that it is not spreading out quite rapidly. I mean, it's always the same type of Northern European countries that are pushing for it, and other countries are less or seem less willing to embrace and happy to renew subscription models. We have seen a phase of new tools coming to the market with the likes of Unsub, for instance, last year. And despite all that, the growth rate of Elsevier has actually accelerated from 2% to 3%. And the expectations are for at least a further 3%, if not more, next year. So I think it will take a lot more to see a financial impact on the big publisher.